Hey, this is Justin with daytradethemarkets.com. It's about 3:30 Eastern Time on Friday afternoon, the 29th of January. I'm done trading for the day. Nice trend day today, so I thought I'd do a quick video and talk about three different really high edge trade entry opportunities to take advantage of trend days, which we certainly had. So I'll talk about the longer term one, I guess, last. The first one I want to talk about is what we call the sweet spot trade. Now, if you may have seen this in other videos, but you can see here we've got what we call these dark blue bars are what we call level 3 or extreme aggression bars. There's one there and there's one that follows it. Okay, so whenever you see two of those in a row, that's telling you there is just an amazing amount of buying aggression coming into the market. And you can see here, if you look closely, right there where these two bars overlap, that's what we call the sweet spot. And I'll just kind of put my draw a box around where those two overlap and draw it over to the right. So the sweet spot is waiting for a pullback to where this really extreme buying essentially set itself out, and then waiting for the market to retest there, knowing that the buyers are likely going to say, this is our territory and we're going to protect this territory. This is where we started it. We're going to hold this. And that's really normally a very nice place to enter a trade. Now, today it was a little bit complicated because we had a couple of things here. One is that Wednesday's high right at the Fed meeting announcement was right at 1910. So after the market broke higher, you could see it did have a little bit of a hard time getting through 1910, and it actually then did attract a little bit of selling off of this failure above 1910, and we had this level 3 or extreme selling aggression bar that came in, and you could see it drove the market down pretty quickly after that came in, right down to our sweet spot. So definitely a red flag in taking that trade, that it's not as much of a perfect setup as maybe that sweet spot is normally. So you had to kind of make the decision on the day. Do I want to take this with a relatively small risk, risk somewhere down in here? Ideally, you could even have it tighter after that deceleration came in. So pretty tight risk relative to the reward possibilities. That's one way to look at it. Or you could say, you know what, this the market not getting through 1910 and then having this level 3 come in, that scares me a little bit. So I want to kind of see what happens with this this level 3 bar. Can we take that out eventually? You can see we kind of just traded a long time, between these areas. And if you were going to be a little more cautious, then you could say, I'm going to wait and see if this thing breaks below these level 3 bars down here and maybe go short with it, or if it breaks above this 1910 and the high of the day like we had right here. So that would be the second trade entry that I would talk about, which is just a genuine old breakout trade. And if we're making new highs of the day or new lows of the day, in this case new highs on what we call level 3 or extreme buying aggression, it's telling us this is not a head fake. Most likely this thing is really going to have a nice vertical move higher. And so you have a couple of options. One, you can just buy it right there on the market. It's a little bit riskier, a little more aggressive. Or two, you can look to get in around the midpoint or the low. In this case, combining it with the earlier high of the day, which is right in here and around the midpoint, you're looking probably to get in somewhere around, this is today's trading, but heading into today, so we don't know before the day that this is going to happen necessarily. We have the last 4 days or so really kind of went sideways. We had an overlap, and whenever you have a 2 or 3 or 4 day overlap like this, it put in a nice distribution here on the profile chart, and these magenta lines here are the value area high and value area low. And we know that the longer a consolidation goes on, that if we were to break below it or break above it and do so on good aggression, there's a good chance there's going to be a pretty nice move higher, okay, when you can break out of one of these combined overlays type of a situation. In other words, the longer the market goes sideways, the more likely when it breaks out, it's going to go. In other words, it's kind of coiling up like a spring, and the tighter you coil a spring, the harder it's typically going to pop. So if we just kind of take this value area high and put it onto our chart here, let me paste that. It came in over here. Let's put it. It's actually right in here. Get rid of this for now. You can see that, again, the idea is from a longer term perspective, if we can break above this value area high and do so on some good aggression, which is either right here or even right here, it's a type of trade where you're saying there's a pretty good chance this could develop into a pretty good trend day. We've broken out of consolidation. We've broken out of balance or value, and we're looking to enter a vertical mode, which is confirmed by these really good aggression bars. So this is the kind of trade where I wouldn't call it a swing trade. I'd call it more of a position day trade or a mini swing trade type of a trade where you're just hopping on board when you see the break of that value area on this good aggression. You might put in a relatively wide stop, 3, 4, 5 points, and you're not looking to make 2 points. You're looking to make 10, 20, 30 points. It's that type of a trade. So some people I know that, are more in and out day traders. Other people prefer to wait for the position type day trade where they're looking for that one good trade a day, and ideally, if they can, hold it the rest of the day. So 3 good entries. Just to recap, the sweet spot trade is certainly one that's very effective. Just the regular old breakout trade, a little bit of one here, and also the kind of position day trade above this value area when we break out on good aggression. So hopefully that makes sense. Let us know if you have any questions on that, and we will talk soon. Thanks.